Hey, happy Freight Friday. Good to have you here again. We are bringing it to you each and every day because we just can't get enough. Today we are bringing it to you with market expert Jesse Cohen hitting us hard with some air cargo data, and also Zach Strickland, junior meteorologist, telling us what is happening disruptively around our fair land, or is it fair? We've got some winter holding on strong. Zach, welcome.
Hey, Chad. Going to do my best Nick Austin impression today. So you see this big chunk of system right here. It's going to start pulling off the coast throughout the day today. So by the time a lot of you see this is already going to be largely off the coast. Severe storms hitting the Carolinas this afternoon, but a lot of wet weather up here around Massachusetts, New England area. It's going to keep things a little soggy.
That's Sweet Caroline.
That's going to be old news by overnight tonight. Don't worry about this up here. It's going to keep pushing on up to the north.
This is a green blob.
It's a green blob. It's a low pressure center is what it is, Chad.
Oh, okay.
And it's starting to push off the coast. So again, some New England traffic troubles here in the late afternoon, but after that it's over. What's of more concern over the weekend, we're watching this system right here. It's going to drop on into the Midwest, and we're going to see this narrow band of snow form right through here, and it's going to drop a very light amount of accumulation. It's simply too warm this time of year to have significant amounts of snow accumulate on the roadways. The sun angles are a lot higher. The ground holds on to a lot more heat. So overnight though, Saturday into Sunday will be the largest concern. So anybody operating over the road there over the weekend needs to pay attention to that. Other than that, it'll be very calm throughout the rest of the country.
They can't catch a break in the Midwest hardly this winter, can they?
Well, they should be used to it at this point. This is going to be not that big of a deal compared to any polar vortexing that they.
Well, at least all the earnings reports, CEOs can say that there were weather headwinds in the second quarter as well.
Yeah, no, I mean that narrow band of snow that happened in late April, they'll cite that, I'm sure. So, but next week, something that Nick will update you on, there's going to be a system that develops right in here, and you notice there's a lot of flooding that occurred throughout Dallas earlier in the week. There's going to be a lot more rain happening in this area early next week, so everybody needs to pay attention to that, especially in the operators moving throughout this area, because a lot of flooding could occur.
It is going to be flooding down in Houston, I'm afraid. That is fantastic stuff, Zach. They don't call you a junior meteorologist for nothing. Okay, and now our market expert, Jesse Cohen, bringing it to us on air cargo. How you doing, Jesse?
I'm doing great, Chad. It's great to be here in Chattanooga with you and the rest of the team.
Great to have you here.
So for today, our first slide up covers the pricing over the last year for diesel prices. And how does that relate to air cargo? Well, jet fuel prices correlate very, very highly with what we're seeing on diesel prices. And the specific concern I wanted to address today is really where we've been since the beginning of the year with the rise up to now, going basically from $1.70 on the diesel prices to $2.23. Jet fuel prices have essentially paralleled that same rise, and it's happened very, very quickly. That forces the issue of carrier fuel surcharges. Fuel is typically the second highest cost for most airlines, roughly 20% of their operating expense. And when you've got a fast rise in fuel prices like this, they have to take some kind of action. Now, airlines have surcharges, just like truckers have surcharges and other airlines have surcharges, but the mechanism is a little bit different across different airlines.
Is there a seasonality pattern to this, Jesse?
Well, certainly we know that during the summer you've got higher demand for gasoline and diesel fuel, but jet fuel sometimes follows its own tracks. But in this case, we've been watching the jet fuel prices on IATA and other indices, and it's tracking exactly the same as the diesel prices are here. So the concern for air cargo business is we're coming into a slow period of the year. Really, the second quarter, third quarter is a low period for demand. We have additional capacity, but the need is to raise prices and maybe multiple rounds of surcharges for some airlines. So that's where it gets a little bit sticky in terms of trying to make that increase stick in the marketplace.
Okay, so rising rates, a big percentage of their costs.
So buyers have the opportunity in some cases, if they've got significant buying power, to negotiate some of this, to make some adjustments in base rates, and to try to get some of that offset, and that creates more pressure on the airline. So it's kind of a tricky situation to have rising costs at a period of lower demand.
What's another chart that you got pulled up for us?
So I wanted to kind of step back. We've reviewed this chart on several occasions before, but
Yes.
this is really going back to last year and the pre-tariff buildup.
How about if you give us an overview for maybe our new viewers?
So this is a chart that tracks ocean container rates, which is the blue mountain line here, last year and into the first part of this year, against air cargo rates, which is the orange line. And what I wanted to focus the attention on is the pre-tariff buildup that we saw, really a second half increase in ocean container rates from Hong Kong and from the China area to North America as many companies tried to beat the tariffs. And we saw that starting to happen in July, but for air cargo, it started to happen about 60 days later. So this goes up here in July, and here this happens around the beginning of September. So,
but there is correlation often. What was the story here, if you don't mind us backing up a little bit?
So
Why
the air
was this
cargo
so?
rates typically peak in the fourth quarter. This is a normal air cargo peak
Okay.
in 2017. In 2016, if we had the chart up as well, you would see the same type of peaking.
Okay.
So the lag here is the focus. We also have a bit of a lag here. Chinese New Year occurred early in February. We saw ocean container rates pick back up right after Christmas, and air rates followed maybe 2 weeks later, 3 weeks later. So this is a normal pattern. So the reason I'm covering this is because for the Europe market, which is really the sort of the next area where we're getting into some significant trade issues.
Yes.
There's about 4 different major trade items on the burner right now with Europe. We've got automobiles, we've got Airbus subsidies, we've got Boeing subsidies, and we have a general offer by the European Union to negotiate all industrial tariffs.
And so you've got maritime data, that's the blue, coming from Europe to the East Coast, and you're cross-comparing that with freight rates? I mean, air rates?
So essentially we're doing the same thing, but the focus here is on Europe to North America. Mm-hmm. So again, the blue line is the ocean freight rate trend for ocean containers from Europe to North America, East Coast. And the green line is the air freight rate trend over the same period of time. So what I think is interesting here, given what we've seen in, with the pre-tariff buildup and folks starting to try to get ahead of tariffs and with all of the additional noise that's out there and the trade issues with Europe, is we're starting to see some early indications on the ocean side of rates moving up after a very long period when they were pretty much stable. This goes back to March of 2017.
Some real volatility.
So now we're starting to really see some interesting movement. But on the air side, if you go back a year to the beginning of April 2018, here we are up here with a lot of volatility, but here we are down here. So we're seeing air rates drop while ocean rates appear to be climbing. So
can you give us a little narrative to the story of what we're looking at?
So
like why is air remained so above maritime, and then why are they, why is one taking such a lead? Is it the type of cargo that's being?
Yeah, it's the type of cargo. We have a lot of complexity. We have a lot of different kind of products out of the Germany market. This is Frankfurt to North America. So Germany produces automobiles. It has a lot of pharmaceuticals. It produces a large variety of cargo. 2017, 2018 were very strong years for cargo. Rates went up, surcharges went up.
Okay.
So I think the interesting point here is we're seeing a different trend here. We're seeing ocean rates rise,
Yes.
air rates fall, but this is one, as we get into more of the daily dues on negotiations, we expect this will continue to rise, and then we will see how quickly air rates respond as we get closer to the threat of tariffs.
Okay. And for your final slide.
Back over here.
Yes. Let's check it out over here.
So we're just about at the end of the month of April, and we're entering a 3-month period where the 3 West Coast airports will really see some very heavy volumes. What we've got charted here are for Seattle, San Francisco, and Los Angeles Air. Their market share of all air cargo exported from the United States. And basically for most of the year, you're really in the 18 to 19% of all air cargo is moving off those three West Coast airports, and the rest is moving off airports elsewhere in the United States. But during the months of May, June, and July, and we're seeing that here in 2016 and 2017, and again in 2018, we see that spike. And that represents primarily cherries that are moving oftentimes to Asia, but there's also a market in Europe for that. And the cherry harvest is extremely important for Seattle. You can see where Seattle spikes the most, that's the gold color, and then San Francisco secondarily. Los Angeles as well handles a fair portion of cherries, but that's a much bigger base of business, and it makes a little bit less difference in that market.
Cherries, wow, who knew? And you're not even cherry picking the data, as I can see. Well, fantastic. Thank you, Jesse.
You're welcome. Thank you very much.
Great to have you on, and we are bringing it to you each and every day from a variety of different kinds of perspectives. As you can tell, our viewer listening each and every day, we are bringing it to you with air cargo today. If you didn't check out our freight forwarding and our maritime look and our economic analysis, we did that this week as well. And of course, overall on what's happening with truckload and just the supply chain. So that is it. The freight train rolls on. We are independent. We give it to you all the time from a variety of perspectives, and we're seeing some interesting trends, with the volatility as people get ahead of tariffs and what is happening in the international community. So thanks for tuning in. Thanks for being here this week. Have a great weekend. We will see you again on Monday. One of the things though that is coming up the following Monday that we're really excited about, and we're making it all happen, and we love to see you there, is Transparency 19. If you haven't heard about it, where have you been? Well, you're here right now and you get to learn. It's not too late. May 6th through 8th in Atlanta at the Georgia International Convention Center, we're going to be talking about innovation, freight tech, all things that are happening. Be a part of the Cool Kids Club and join in. We'd love to see you there. All right, so in the meantime, check us out, share the love on social media. Don't forget, and in the meantime, don't worry, be happy.